Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his guest, his Thursday guest, Mr. Jonathan Twomley. How you doing, sir?
I'm doing great. How are you?
I'm doing well. So thanks you again for sharing your interview or discussion, I guess I'll call it, with Ryan Severino.
Severino.
Yeah.
Severino. Sorry, Severino. Ryan
I,
Severino.
I confused
You screwed me up.
I
Yes.
did. I was on me. I had it right the first time. Well, anyways, with Ryan, so we already talked about in video number one, my big takeaway. But there was a subtle thing in there that I just wanted to get on record, in that inflation hurts everyone. It is a tax, as I've said many times. It hurts the people at the bottom the most because it's disproportionate. But there is one set of individuals that actually benefit from inflation. So I thought we should just highlight who they are, because maybe people want to benefit or use inflation. So who can use inflation to help them, Jonathan?
You and me.
You and me. Yay!
No, I mean, the people who benefit from inflation are owners of residential real estate, right? More so than any other form of real estate, but residential real estate, because you can reset your lease terms every year, right? And sometimes shorter than that, right?
Yeah.
So unlike unlike say commercial, retail or office, where you've got these very long-term leases with
10 years with 10
years, and they may have escalations, but if your escalations are below the cost of inflation, then you lose out and you can't do anything about it. Unlike those kinds of tenants, for residential, your leases are getting renewed every single year, and that allows you to keep up with inflation. And as you know, when you've got inflation and you've got rising rents, if you look at how the expense structure of say an apartment building works, right? You've got various inputs to that, but usually you're operating at a 50% expense ratio or below, which means that if your rents are rising at the same rate that your costs are rising, you're making money. You're coming out ahead, right?
Yeah.
Basically, because the rents are that number is double the expense number, right?
Correct.
So inflation is great as long as your rents are rising at the same rate as your inputs, which are basically, labor is a big one, taxes, but taxes tend to rise in line with values, right? So you're not really going to get ahead of that if you're, and then the other big input to your expense it's not an operating expense, but still an expense for you, is your debt cost.
Correct.
Right. And as long as you're smart and get a fixed rate mortgage, right, you are literally the real value of the money that you're paying. Your mortgage is getting cheaper and cheaper and cheaper for you every year in real terms.
Every time.
It's literally getting inflated away, right?
It is.
So
yes,
it's literally you're paying with cheaper and cheaper and cheaper dollars, right? So that's why inflation is your friend if you are a landlord, right?
Yeah.
And now if you have like super high levels of inflation, then maybe not, you can't keep up even with your annual renewals. But if you're talking about sort of, historically typical inflation, 3 to 5% a year, then that is really,
even if it's on the high end, even if it's 5% a year, as a landlord, you're winning. And oh, by the way, if you're residential and you have 30-year money, you don't even have that reset risk.
Yeah, exactly. Yeah.
Yes.
So if you're a single family house, right? So, but still, even in multifamily, you can get up to 10-year paper, right? So you have a long runway to, inflate that debt cost away. And then when you go to refinance, if you don't get greedy and go back up to 70%, if you just refinance at that same level, even if interest rates have gone up a lot, you don't really care,
right?
Because your
top line is so much higher.
Right. I mean, you'll obviously, if interest rates go up, you'll pay more, right? For that, your debt service is going to go up, but as a percentage of your overall cost structure, right? It's become very low because you've had principal pay down and whatever, right? Yeah. So it's going to, so if you are in real estate, be happy about, this kind of inflation that we're experiencing. And the other thing too is that you also do have some ability to kind of restrain costs a little bit, right?
A little bit.
So, I mean, you don't have to give your employees, like, you don't have to raise their wages as fast because there's some stickiness to it. They may not want to leave their jobs. They may like working there. They may, like, there's kind of, it doesn't necessarily go just in lockstep, right?
Correct.
So you can look for alternative things to purchase that are cheaper. Like, so you have some ability to control costs, right? Not completely, but you have some. So, but in any way, it doesn't matter. As long as your rents are rising year over year at the same rate of inflation that your costs are rising, you're in good shape.
And that was really a big lesson, not only from the discussion with Ryan, but again, I went back and looked at the 70s spreadsheet, or that 50-year spreadsheet at the 70s, right? Inflation would average 6% in 1970s, like the decade. And what did that mean? Housing doubled, right? Again, think about being the owner of property, right? You go from 100 to 200 or 200 to 400, right? Whatever it is. And oh, by the way, the other thing that's not on the spreadsheet is rents. I've went back and tracked down rents. Rents went up 116%. So if you had 30-year debt or 10-year debt, just think about that. You're collecting $200 a month or $1,000 a month or whatever it is, and now it's $2,000. All of that, or at least most of that, falls to the bottom line. And yeah, again, you can use inflation. It's the owner of cash flowing assets, rentals that have fixed rate debt.
I mean, I do think we should be responsible and point out something else that was going on in the 70s too, though, which was the baby boom generation maturing into renting and owning homes, right? The household formation was really high in the 70s. So that definitely was wind at the back of housing for sure. So you can't, it wasn't just that, like, well, inflation, I mean, it's hard to say which was the stronger, right? But probably they both, but the point is that inflation didn't, like, break the back of housing, right?
No.
So
did not.
Even
with rising rates. Yeah.
Even with rising interest rates, right? So, and probably, but that may be where, that baby boom, just a huge demographic
kept going,
wave kept prices high. Now it will be interesting to see with that demographics not so favorable, that happened with that combination if we have rising interest rates at the same time that, and this is, again, I think Ivy Zellman talks about this point.
He does.
Demographically, demand, we may have seen peak demand, right? So rising interest rates plus declining demand.
Double whammy, maybe?
Yeah, I mean, that's
certainly Ivy's opinion. Yes.
Yeah. And if you look at Japan, like, they didn't have rising interest rates. They went the other way, but the declining demand from the end of the Japanese baby boom, or that cohort passing through and starting to retire, that was not good for the Japanese economy, and was a lot of what, that lost decade.
Yeah.
That was because of demographics. So.
And the lost decade was the 90s?
Yeah, I mean, 90s
roughly
2000. Yeah.
Okay.
Yeah. So.
Yeah, I'll have to go back and look at that. Yeah. Well, Jonathan, this has been a fun conversation. Again, inflation, it was one of those things like, wow, inflation is really good if you're a residential landlord. That was a big takeaway from that conversation. I knew it was good, but I didn't know how good.
Yeah. And obviously this is why, the demand for housing has just exploded, as an investment asset.
Correct. That's why Wall Street's looking at it. Yeah.
Yeah. Everybody's looking at it because of its inflation hedging possibilities. Right. And so, or not even necessarily as an inflation hedge, inflation was going to help you. And if you think there's going to be inflation, then, like, you want to get on the right side of it.
Correct.
With housing. So that's, I think, the thinking that's driving a lot of what you see in the markets right now.
With no doubt. Well, Jonathan, thank you for this week. It's been a lot of fun. How can people follow you and get part of your world?
Yeah. So please join my free Facebook community called the Multifamily Investment Community. Just search that on Facebook and answer the questions that pop up when you try to join, and I'll let you in. And the other way is to Google me at Two Bridges Asset Management LLC if you want to join my investor list.
Very cool, Jonathan. Thank you for the week. Take care.
Thank you.